The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Welcome, folks. This is Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, future-wise, you got the market flat out here. S&P's basically running out there at 2107. You get the NASDAQ futures down 3. NASDAQ futures, folks, have been the strongest out here, period. Over in Europe, you got the markets flat. Gold contract right now is trading down 450 at 1196. You got silver down 4 cents at 1625. Platinum is at 1159. Light sweet crude up 56 cents at 50.02. Bonds, we have the 10-year down 7 ticks, 30-year off 17, and King Dollar's up 138 ticks at 94.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go first into the world of gold. We take a look at this gold contract out here. What we've had out here is that this little baby has been testing the lows, rejecting the lows for just about a week right now. We've been laying at the exact same spot out here. Thus far this morning, yesterday we got down to the 1190 level. This morning, thus far, we got to 1194. What has happened in the dollar complex is that the dollar has continued to try to get to higher price, hasn't been able to stay at higher price. However, that being said, it hasn't pushed lower into that February 3rd swing point yet. So we'll see, how basically either the dollar's going to break topside and get into that February 3rd price point right now. What I do expect you're going to see out here today is that Janet Yellen is going to be in front of Congress. That will put a little juice inside the market, because right now the market, no doubt, has been in a sideways movement. You had the burst higher on Friday, but bottom line is that at this particular point, you're still only about 7 to 8 points over the consolidation that the market has been in for 3 months. And what's intriguing about that is that when you take a look at the oil and gas sector and the financial sector, both of those sectors, bottom line, the financial sector hasn't been able to get to its highs. The oil and gas sector is 20% off its highs, so it's pretty intense. Dollar index out here this morning. Thus far, what the dollar index has done is this. The high that it went to this morning is 94.97. The last swing high, folks, is 95.23. So the dollar's been laying here since the 26th of January. 26th of January, that's when the dollar goes to highs. Been consolidating back and forth since that point. And bottom line, you have another day and another day that it just can't, for someone, not someone, there's, I'm sure, multiple operators that are in there selling it, traders selling it as the dollar approaches that 95 area. Today it got to 94.97. And so what does that do in a larger context? Well, a larger context, that February 3rd is wide open for a test. The euro this morning is trading at down 14 ticks, no big deal. Now, let's go over to the bond market, because what we had yesterday is this. Inside bonds, the market was flat yesterday. With the market being flat, you still had the bond market reject lows, take off, and start getting some strength once again. That's very unusual, folks. That's unusual in the context that you have a flat market and money was still going into the bond market and was going in pretty quickly. So the 10-year right now is trading at a price point of 127.26. You don't have to get that much higher in the 10-year. The 10-year, you get back inside 128.15, And that's going to put you in the higher range. That 128.15, you know, when we take a look at bonds right now, you're only talking, you get 32 points inside 1 point, 32 ticks rather, inside 1 point. You're at 26 right now. So you get all of 21 ticks. That's not a lot to get inside that range. That range that we're talking about is when bonds had come down on the 6th. On the 6th, that was a very large movement. That 10-year came down 2 points on the 6th. You know, 10-year went from a price point of 130.11 to 128.15. You know, so we'll see how that baby does shake out. We go and look at the 30-year, and what you have with the 30-year is this. The 30-year is the leader. The 30-year has been the leader, is the leader. The 30-year right now is trading out at 144.29. And that baby, you know, you're pulling back slightly out here today, and it's dramatically lighter volume. And we're going to have there's going to be a roll that's happening here also. But so the 30-year only has to get over the 146.11 basically. Well, actually 147.01. 147.01. So the 30-year does have longer to go to get up into the larger range. Out here this morning, the market is flat. Home Depot is coming out. It came out with numbers this morning. Good numbers. Home Depot closed at 112.28. That's going to open at about at 116. Big number on Home Depot out here this morning. And the numbers go like this. Let's see. So Home Depot, they're going to buy back $18 billion in stock. The thing that's amazing when you actually look at it, this is always a shame. You know, Home Depot in the last 3 years went from $35, it's at $112, and now you're going to buy the stock back. But guess what? They're making money. That's how it goes, I guess. Insane, though. Absolutely insane. So they're buying $18 billion back. Let's just see what this is. So they get a market cap of 147. No, my God, 18 billion's nothing, because they got a market cap of 147 billion. Yeah. Shares outstanding, man, they get a lot of shares outstanding. Bottom line is that they're spending money at the highs. They're paying a 2% dividend. You know, we'll see if Lowe's, yeah, it's affecting Lowe's too. Lowe's closed at 73.73, and that's going to open up at 75.57. You know, so both of those you're going to see moving into higher price. We'll see when we do get the open here is that what's putting a little pressure on the NASDAQ. What we do have is that the NASDAQ, the NDX 100, it's only down $3, but the NASDAQ itself has been going not higher on a continual basis. Yesterday, what the 3Qs did, we take a look at the 3Qs. 3Qs yesterday traded at 108.52. Volume-wise was 17 million out here versus 28 the day before. The 3Qs would have to get back inside the 106.24 mark. So we'll see where that does shake out. Apple, of course, is the large weighting inside the NDX 100, and Apple continues to go to higher highs. What is going to get intriguing about Apple, no doubt, is that 1 in 5 hedge funds own Apple, folks, okay? That's pretty amazing, okay? So bottom line, when that door opens, which it will open, by the way, there's not going to be enough room to get out, because that statistic is pretty insane, that 1 out of every 5 actually own it. You know, Apple yesterday, you had that expansion of price. You did have a little jump up in volume, and yeah, it's not going to be like there's a lot of buybacks, because Apple itself, they only have 1% of the equity is short, so no one is short Apple out here. We go over and we take a look at the UK. The UK out here this morning, folks, is trading flat. Let's see. Yeah, you get the FTSE is flat, the DAX is flat. You know, the DAX has run to higher highs. The FTSE has been having a harder time. The FTSE, let's take a look at this right now. What we have with UK, what we have with the FTSE is this: the high of 6 months ago is a 69.04. You're at 69.32 right now. Yeah, yesterday we ran up to the 69.43 level. You're at the 32 level right now, and we'll see if, in fact, they can get it up and over. What is going to be out there, well, what is out there, once again, is that you have the Justice Department is investigating the world's biggest banks. This time they're investigating them for fixing and rigging the precious metal market, folks. Silver, gold, platinum, at least 10 banks, including Barclays, JP Morgan Chase, Deutsche Bank, being probed by the Justice Department Antitrust Division, said one of the people who asked not to be named because the matter is confidential. The metals investigation, which is in the early stages, broadens the Justice Department ongoing scrutiny of the banks over manipulation of the financial benchmarks. Prosecutors are conducting criminal investigations into the alleged rigging of the intermarket lending rates in currency markets. HSBC disclosed Monday that the Justice Department and the U.S. Commodities Regulator have sought documents from the bank on precious metal dealings. The London-based bank said it is cooperating with the probe. Sure it is. The banks under investigation also include Credit Suisse, UBS AG, Goldman Sachs, Societe Generale, Bank of Nova Scotia, Standard Bank. The person said the Wall Street Journal reported late Monday that those banks were being investigated. The banks either declined to comment or didn't immediately respond to a request for comment. 3 banks that settled currency manipulation claims with the U.S. regulator in November. JP Morgan, Citigroup, and Bank of America were required under the terms of those agreements to review and identify other trading activities that could raise similar conduct issues. Those reviews triggered scrutiny of the precious metals trade, another person said. It's pretty interesting, man. It's going to be wild watching this whole thing shake out. Bottom line, folks, is that the banks, yeah, if they can rig the market, they'll rig the market, period. No ifs, ands, or buts about it. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Don't forget, folks, every Tuesday, Thursday, right after my show in the afternoon, our man, Mr. Andy Hecht, is going to be out here growling and prowling with you 5 to 6 Eastern Standard Time. Outstanding program. Andy is also doing an outstanding webinar. It's tomorrow night, folks. It's about the oil markets. You can check it out on the front page of TFNN. You're going to see it right there. It's going to be, the webinar is going to be at 6:30 tomorrow night, Eastern Standard Time. The dollar index continues to just hang out here at the up 158 at the 94.81, and gold is at that 11.96. You get silver at 16.27. Let's go look at silver. What was interesting yesterday, folks, is that silver, when gold was down in the morning, gold had been down 0.4%. Silver was actually up 0.6%. Now that's not percentage-wise a huge amount. What is totally different, though, is that correlation is they always move together, folks. And the bottom line is that what you had out there is that the silver market itself wasn't budging on the way down, and so what you do have there is this. Silver this morning, you're at 16.26. We'll see if, in fact, it can basically get up and out of this area and get into the silver has to get above the 1660 mark to get into the higher area. That's on the top side. On the downside, the last spike in silver was 1470. That was quite a day. That spike came on December 1st. That was about as intense as you can get. Silver had traded that day to 1470 and then all the way back up to 1671. That was pretty intense. What I had done on Sunday, I was over at the BMO, the largest gold and silver metals conference in the world. Happens to be in Hollywood, Florida. I was over there Sunday talking with some CEOs, and what was intriguing is that this level at silver right now is the level that the silver producers need in order to make money. They're basically just above their head at this 1625 area. Now, that is a big number, because silver is a byproduct of many of the miners in general. Then you have just the pure silver traders, the producers. When you look at their cash costs that they claim as cash costs, they'll come in at cash costs and, you see $4.40, $6. I've seen as low as $3.75, $3.50. Well, that number, okay, and we've talked about this in the gold market quite a bit before, that number doesn't relate to actually what it costs to get silver out of the ground, to get it into someone else's hands, and to sustain the ground. What ends up happening, accounting-wise and real, is that you have to put that ground back to its original, take the ore out, put the dirt back, and leave it basically as best you could after you're mining it. We'll see how much further they can push this baby down. The CEOs in general felt, and this was pretty intense, that the disconnect is there, number one, and they are still worried that even though that's what it would take to get it out of the ground, that the market really doesn't care, that they can push it lower than that. So that was intriguing in the aspect that when you look at the supply and demand curve, it gets below that point, and there's no doubt it gets below that point, and you will see producers basically stopping production, because on every ounce they'd be losing tremendous amounts of money. I don't think it would have to basically probably go into $14, $13 for 2 or 3 months, and they'd have to say, okay, that's enough is enough. Because you got to realize what ends up happening. The silver producers produce millions of ounces of silver. Gold, you're always talking about hundreds of thousands, except for the large ones. They do a couple million. Silver, different ballgame. And if you start losing $1 or $2 per ounce of silver, that is one huge number. There's no two ways about that. We go over to the oil market. We take a look at the oil market this morning. What we have with oil, so oil is trading out at $49.99 this morning. Thus far, we've traded to $48.68. Oh, I see what it's doing. Okay, so yesterday we had a spike up to 50, 56. It's going to want to test that spike. That spike yesterday at 50, 56 wants to get tested. We'll see if it has any juice up there. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to come right back for the opening. Market, futures out here right now are flat. Bond market is going to dictate where these things are going to be going. And Yellen's going to be speaking out here. And I suspect until she's speaking, that's when the volatility is going to come in this market. We're going to be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even
even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Sorry about that. Missed this clip. So right now we got the Dow opened up. The Dow's up 23. You got the NASDAQ. Give me 1 second here. Sorry about that. We just had a little. Okay, so this is. Dow right now is up 14. You get the NASDAQ off 8. We have the NDX is down 9.25. Bonds, you got the 10-year up 5 ticks, down 5 ticks rather. The 30-year is down 14. King Dollar, she's trading out up 152. Now inside the NDX 100, let's see what's moving out there because we want to watch that NDX 100 to see basically if that wants to turn. Bringing it higher today is you have Tractor Supply that's up $1.85. Microsoft Monster Beverage is up $2.48 at 124. Expedia is up 91 cents, and Express Scripts is up $1.63. Bringing it down is that you got Micron. Ooh, that's getting smoked. Look, check this out. The Micron Tech is down 240 or 10%, just about 10%, 8% actually, at $29. That's a big number. Wynn Resort is off $677 at $147. You got American Airlines down $168 at $49.77, and Vodafone is off $1.18. This is a big number. Let's go back to Micron for a second. We take a look at Micron. We'll pull Micron up. We take a look at Micron here. MU. That is one little beating there Micron's taken. So let's see what they have to say first. Micron. It's not like this. I think it has to do with some kind of Samsung news. Well, bottom line, Micron, you're at 29.13. You know, you're down on heavy volume, by the way, too. And this does have the. Oh man, this is a trip. So that October 15th swing low is still out here, folks. The October swing low on Micron is 26.32. That's where that baby is heading right now. That's what that shakes down to. But that, no doubt, is quite a hit. Let's see if it's hitting the rest of these chip stocks. Not really. Intel is up 15 cents. Not the end of the world out there. Some of the faster moving stocks, meaning the higher volume stocks right now in this market, is that you have Micron is down 225. You get Apple off $1.30. First Solar. Oh, there's a rocket ship. Let's go look at that. First Solar is up $7. Home Depot is up $4.72. That's up 4%. You got American Airlines down $1.65. FSLR. Let's take a look at First Solar. First Solar out here, FSLR. So First Solar, she's been building a base. She came in with really nice volume last week. Last couple of weeks, you can see first on the February 2nd, comes in with wide price spread, accelerated volume, goes from 42 to 45, follows through the following day, goes to 48. And then this is where you want to pick this up, folks. This was really subtle. And I've seen this many times. When you start pushing into swings and you have an expansion of volume that's dramatic, and this had it. This had it on the 11th of February. 11th of February, the volume goes, up to 12 million shares. And the price didn't move a lot. The price only moved from 48.11 to 50. Bottom line, right at that point, that's when you have a monster that is accumulating that deal. What you have out here today, what the news is that First Solar and SunPower, the two largest U.S. solar manufacturers, are planning a joint venture that will own and operate some of their projects. The companies expect to register for initial public offering, and the new venture, according to statement, they didn't say when it may occur. But bottom line is that what that's all about then is about huge savings in expense, because if you have the two largest companies that are getting together, bottom line is that that is saying the expenses will go down dramatically. Inside the Dow, Industrials out here today, putting juice into it. You got Home Depot, that's up $4.58. That's the leader inside the Dow. J.P. Morgan Chase is up $1 at $60.43. Intel is up 15 cents. Caterpillar is up 31. Taken away from it on the way down, you get Boeing down $1.37. Verizon is off 39 cents. Big Blue is down $1.14, and Ma Bell is down 18. If we come over to Big Blue and take a look at Big Blue has not only been having some huge problems. That Big Blue cannot make it over the downdraft that had been created when it gapped down. I mean, this gap down was pretty dramatic. If you talk about a supply line, that supply line lays out there at 161. Right now it's at 161.72, but it's about as dramatic as you can get. So Big Blue is going to make another run for the lower end of this lower end consolidation that has been trading at, and that is at the 149 mark. So business-wise, Big Blue, I suspect, is struggling in a very large way. We go take a look at the inside. Let's see. So Micron is getting hit, and if we take a look at Micron's down 7%. Is Micron and SanDisk? SNDK. Let's take a look at SNDK. See what SanDisk is getting hit out here this morning. SNDK. What we have with SanDisk is this. Yeah, these both look the same. So SanDisk had gapped away. SanDisk was at $98 on the 8th of January. 4 days later, it's at $78. Now SanDisk. This is a classic one too. SanDisk also had the October 15th high volume swing low. So check this out, folks. You have to wrap your head around this, because this October 15th high volume swing low is in the S&P, and it's going to get tested. SanDisk had a high volume low at $80.26, October 15th. It goes from $80 and goes all the way up to $106. So when you look at that context, you're saying, okay, you get an $80 stock going up $26, right? Huge, right? That's at 27%, right? Guess what? You go up 27%, and boom. It took looks like it took a month. So November, this is pretty wild. It took a month and a half to get up there, a month to come back. And now it's underneath it. And you are trading underneath it, and now you have a larger high volume spike down here at 74.30. So that 74.30 also is going to get tested. If we go over to Google, what is interesting is that, for an equity that almost runs the world, you haven't heard a lot about Google in this whole run-up, which is just amazing because, bottom line is that, any type of business you're doing, I mean, Google's involved in it. So Google's only $60 off its high. That high that we're talking about, actually, let's see if that's the high. I think it is, though. Yeah, that high we're talking about is $5.99. 604, I guess the high is 604. And what we do have, though, Google wants to try to make its way into 489. 489 is a high volume low also. And I believe Google's already, what Google has done, the 508 was the high volume low on October 15th. It tested that on December 16th. It tested it again on January 8th. And bottom line is that it wants to go run into that again. Google did have a shot on the January 30th to get up and out of this whole deal, but it didn't make it. On January 30th, Google went from 515 to 539, but guess what? It couldn't take the swing point out that day. If it had taken a swing point out that day of a week prior, then Google would have had a shot. But it died in the vine. Got over it, didn't get over it, light of volume, and now you're back right inside it. If you come up to a swing and you're pushing on volume, what you want to see if you're a bull is that you can see it pushing on volume, build a little bit more cause, and then get over that swing with volume. That's bullish. If you're pushing a swing point and you push up to it on volume and then you stop like a couple points away from it, that is not a good scene. And what happens there is this. You go over the day that you had volume, you push into the swing point, and what has happened there is that all the energy has come out of the equity before you got to the swing point. That's why swing points are so crucial. That's where markets talk, walk, and squawk. We go take a look at the bond market out here. See, the bond market's really intriguing right now because what you did have out here yesterday is that bonds stopped moving higher yesterday, and it's like, why are bonds moving higher yesterday when we had a flat market? Bottom line is that you have folks putting money behind bonds once again. And this morning, you get a rejection that the 10-year has already rejected 127.24. You're at 127.28, and it looks like to me like this 10-year is going to make a run inside 128.15. And that is a setup. After the last downdraft in this bond market, it's not that there was any technical damage, but you had that wide price spread. You had an expansion of volume on the way down. That expansion of volume, however, was still lighter than the volume on the way back up. You have bonds go topside once again. That's going to basically put a shocker into the market once again. That's how this is laying out. Wynn Resorts. Let's go look at Wynn because Wynn Resorts. These casinos in Macau, China, have been having a big problem. They've been shaking, rattling, rolling the China bureaucracy, basically putting everyone away because of the amount of corruption over there. And Wynn is trading at this 148. Well, guess what? We have a high volume low that's hanging out there at 133. It's going to go after that 133. And when we take a look at the correlation, Wynn is this is pretty intense actually. Wynn's at 148. Its high is 247. It has a high volume low at 133. So it's going to go after the 133. Put this on a longer term basis, and what you're going to see, this is pretty intense. Watch this. If I put this on a longer term basis, this is a total failure. These casinos have some rough sailing ahead of them. So what Wynn had done is this, folks. Wynn had basically consolidated. It took out all its swing highs on September of 2013. Gets above everything on light volume, mind you. Okay, but that's we went from 151. That's where the high was. Went up to 247. Now what it's done is this: it's come back inside the lower range with volume. What that sets up, man, that sets up something. That sets up $54 on a longer term basis. 124 would be next. It has its chance at 124. At 124, where I'm going with the 124 level, that was the high of October of 2011. That's where that's shaking out. So we'll see how that handles that. LVS. Let's go take a look at Las Vegas Sands, because Las Vegas Sands, same type of business, meaning most of that money comes in through Macau, China. Las Vegas Sands as the 17th of December. That's screaming, meaning it wants to be tested. Huge high volume low out there. That high volume low is at $49 here at 56 right now. We put this on the monthly, and on the monthly, the difference is, that's interesting. So the difference on the monthly for Las Vegas Sands is that never got back to a 2007 high. The 2007 high was 130. That counter trend bounce got it back to 88. Now you're at 56. And it looks to me that what's wide open is 52. So that's not the end of the world. 52 looks like where Las Vegas Sands wants to go to. Dow right now is up by 23. You get the NASDAQ down 3. S&Ps are up 1.25. Gold is up 440. You get silver down 440 rather. Silver's up 5 cents. King dollar is up 143 ticks. Trading out at 94.80. We go take a look at King dollar and see where King dollar is setting up, because with Yellen talking, folks, King dollar is going to be on the move out here. Volatility-wise, meaning you're going to have the bond market on the move volatility-wise, and I suspect we're going to have the metal market on the move volatility-wise. Intraday, what we have with King dollar right now, if we put this on a 10-minute basis, what you're going to see is that, let's see, so DXH5. Yeah, she's just flat. That's the bottom line. She has a slightly she hit a low today of 94.61. That wants to get hit again. We'll see if there's any juice that comes in the market at that 94.61 area. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now up 25. Nasdaq's down 3. S&Ps are flat. We're going to be right back, folks. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow Industrials right now are up 31. The Nasdaq's down 7. S&P's are flat. We have gold down 4.30. Silver's off 3 cents. And with that said, bottom line is that the gold stocks are hanging tough here. The XAU, we take a look at this XAU, what you have with the XAU right now. XAU is trading flat. It's down 17 cents at 74.06. The Gold Bugs Index, the HUI, is trading down $1.80 at 183.29. In both cases, bottom line, that's actually a sideways move. Some of the higher volume stocks in this market right now, as we're speaking, go like this. Whoops, let's put that one up there. Okay, so you have Micron is the big mover out here. That's down $1.87 on the way down. On the big mover on the way up, First Solar, it's a little rocket chip. That's up $7.80. JP Morgan Chase, we'll go over and look at that. That's up $1.43. Home Depot is up $4.80. If we go take a look at JP Morgan Chase, let's bring this baby up. JPM. So JP Morgan right now, let's see what she's doing. Okay, so we're at $60.80. The high in JP Morgan is $63.49. And that little baby, we'll see whether it can make it up to it. Certainly getting a little juice in there today. We're doing 5 million shares. It's coming into the downdraft that had 29 million, but that 5 million. That's not a bad number out there. There's no doubt about it. Let's see. JP Morgan. Well, this is always interesting too. What JP Morgan is going to be doing is that JP Morgan is going to be charging large customers fees. They're going to be charging hedge funds fees to actually keep money at their broker dealer and the bank, which is just pretty amazing. There's no doubt about that. This is Tom O'Brien. This is TFNN. Don't forget, folks, this afternoon, our man, Mr. Andy Heck's going to be doing a show right after me, 5 to 6. Tomorrow, great workshop Andy's going to be doing. You can sign up for it right now on the front page of TFNN.com. You stay right there, folks.